Very good morning to all. Bloodbath was seen in the major US stock indices yesterday, but as expected, which we mentioned yesterday, the three major US stock indices are undergoing this minor corrective pullback towards their said 20/50-day moving averages, dragged down by a sell-off in those higher beta sector of the US stock market, particularly in those high-flying semiconductor stocks, over fears of higher borrowing costs may creep into their net profit margin as the longer-term US Treasury yield, which is a 30-year US Treasury yield, hovering at this 5.3%, which is close to a 20-year high. So that also created a bloodbath in today's Asia session as well for the Asia Pacific stock indices. But however, these losses has started to trim off as we are speaking right now, 11:06 a.m. Singapore time. And very interestingly, the risk sensitive Australia dollar, the Aussie dollar, managed to rebound after hitting our pullback support that we mentioned in our daily dose yesterday. Similar for gold prices as well, managed to find support at around this minor range support level close to the 432 4,320 level. Oil prices continues to held rather firm, trading at around $85 to $90 per barrel, both the West Texas crude oil and the Brent crude oil, over tension re-emerging between these two key stakeholders in this ongoing game of poker between US and Iran, as both sides does not want to back down from this current game of poker that is being ignited, where there is no clear signs that the Strait of Hormuz will get open in the near-term horizon. So before we kickstart today's gist of the daily dose, let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Right, so here we go. So just to make sure that the screen is good. Right, excellent. So let me share my screen. Right, so let's take a look at what has taken shape yesterday in terms of the relevant news flow and events pertaining to their impact on the various broad-based cross asset classes. So yesterday in my daily dose of market insights, we do have a bearish bias on the SPX and the Nasdaq 100. So that came in within our expectation. So the worst hit was the Nasdaq 100 down by negative 6.8% due to the fact of a sell-off in US semiconductor stocks, where the US semiconductor PHLX semiconductor index tumbled by a whopping negative 5% due to their higher beta nature, given the fact that higher beta, that means that, i.e., they tend to be more sensitive to risk appetite. So a significant sell-off in this high-flying semiconductor stocks is due to potential high borrowing cost fear, where this surge in longer-term US Treasury yield could potentially lead to higher borrowing costs. Higher borrowing costs could eat into their profitability or their earnings growth in the next quarter or so. So if you look at the heat map of the S&P 500, we see a slew of sell-off, deep sea of red, particular in the semiconductor, we call it a segment, the technology sector. So in the red, so what we could see over here is that Marvel Technology was the worst hit, down by a whopping negative 7.82%. The biggest market cap, Nvidia, down by negative 3.4%, then followed by Broadcom negative 3%, Micron negative 7%, AMD, Intel down negative 4 and negative 6% respectively. So, but however, there's pockets of green, particularly in those segments that is much more concentrated on, we call it defensive play, consumer staples, energy, as well as healthcare. So consumer staples, yesterday, Target also came in within expectation. Target Core, which is one of the major retailers, earnings beat managed to rose 0.97%. Hence, given the fact that Target has a direct correlation with Walmart, so Walmart is one of the key component stock of the Dow Jones Industrial Average, pardon me. So Walmart is one of the key component stock of the Dow Jones Industrial Average, up by 0.76%. So that actually explains why the Dow Jones Industrial Average fare much better among the other two which is the Nasdaq, the SPX, and the Russell 2000 as well. So yesterday we do have we call it, we also do cautious that the Dow Jones Industrial Average, which is our US Wall Street 30, is fast approaching a key pivotal support level on the near term, which indeed it managed to store the 3 days of sell-off or 3 sessions of the prior sell-off managed to store exactly at this key pivotal key support zone area, which later I'll share with you. That will be my pivotal support for today. All right. So net overall, yes, we start to see a big sell-off in the US stock market yesterday, but all this sell-off managed to pull back to respective set key near-term support level. Potentially, they could be ripe for a minor bullish reversal today, given the fact that various major US dollar pair is now showing signs of dollar weakness, again coming back into the picture. All right. So that is the situation over here. So what's the situation that causing this sell-off in the US stock market yesterday is due to this rather steep rise in the longer term borrowing costs over here, where the 30-year actually spiked all the way up to 5.33% over here before doing a slight pullback in today's Asia session at 5.277%. So if we were to very quickly, let me share with you the longer term chart. So you look at the monthly chart over here, very clearly it broke out from the peak previously seen in October 2023, where we also has the fear of rising longer term year. At the point in time, it's due to the onset of the Russia-Ukraine war that's pushing up prices of, we call it food related products, right? So this time around, market participants has also having this narrative where this ongoing, we call it dispute or the game of poker between US and Iran could prevent the Strait of Hormuz from reopening. And despite the fact that the Strait of Hormuz is also a waterway that is being used to ship other necessity as well, like fertilizer and whatsoever. So that could actually, or other natural resources that the global economy required to fulfill their normal functioning of the global industrial activities. So that could potentially lead to higher inflationary or cost of raw materials eating into the longer term perspective of the businesses input costs, I would say. So that also one of the reasons that causes the 30-year to jump. And most importantly, another reason we are explained yesterday is to the distrust of the US government in maintaining their widening fiscal budget deficit. So that's more of a dollar narrative, a debasement story coming back into the picture again that actually allow gold to actually survive by not plunging that much. Right, so it actually come close to a 20-year high yesterday of the 30-year treasury yield. So that created a higher long-term borrowing cost fear in the global economy yesterday that spoke the global stock market sell-off. All right, so then on top of that, we also have this, we call it Anthropic, that is going to have this IPO credit facility to climb past 10 billion. So that also pretty much of a concern to market participants as well, saying that this AI frontier models has this huge bring of borrowing appetite. So if things doesn't turn out well as expected in terms of profitability target, that could also create a negative feedback loop into semiconductor related stocks, given that both of them are intercorrelated. All right, so that's a wrap for the first segment of the daily dose. Now, let me very quickly touch on the second segment, which I will share with you guys. Highlighted instrument that I deem to potentially could have a meaningful, significant higher volatility intraday movement for today. All right, so before we do that, let me expand my screen over here. Okay, great. So let me touch with the FX market first. So one of the FX, oops, sorry. So one of the FX pair I want to share with you will be the sterling dollar. All right, so the sterling dollar continues to pull back yesterday. So this pullback managed to store exactly at our pivotal support that we mentioned on Monday at 135.10 level over here. And what's interesting over here is that we start to see a bullish breakout from the hourly RSI. So the hourly RSI linking the prior high, lower high and into today's Asia session So what we could see over here is that we have a momentum bullish breakout, all right, from this former descending trend line resistance, and also back above the 50 level mark, indicating that we are now starting to see a build up of short-term upside momentum coming back into the sterling dollar. So with that, no doubt 135.10 will be my short-term pivotal support level, also slightly above this minor ascending channel drawn from the low minor swing low of 7th of August, having a bullish bias intraday for today. Three resistance level to watch: 135.80, 136.05, breaking above 136.05, which is the upper limit of this minor ascending channel, pardon me, may potentially take us up to retest the 1st/11 May 2026 minor swing high area over here, which is 136.43, and that also confluence with the one-time Fibo extension in this ongoing bullish impulsive upward sequence since the low of 28th of July, where previously during the 7th of August, it managed to stage a bullish breakout and a retest on the 13th of August, right exactly at this former medium-term descending trend line that was previously in place since 28th of January 2026 high. 2026 high now turns into a pullback support area at 134.79. So if we start to see a breakdown below 135.10, that would indirectly invalidate today's direct bullish bias view to see a choppy downward drift to retest again 134.79. However, breaking below 134.79 will trigger a deeper minor corrective pullback to revisit the 20-day moving average, confluencing at 134.40. All right, next up will be the Aussie dollar. So the Aussie dollar, yesterday we do have a bearish view for the pullback to take shape right exactly at 71.20, 71.30. Pullback meter rises, almost hit our support level at 70.65, and right now coming close to the former minor range support area of 11th of August and 13th of August at 70.50, 70.45. Given that the hourly RSI has also hit the oversold level before shaping an exit at the start of today's Asia session. So with that, potentially that pullback, corrective pullback sequence may be over. That minor corrective pullback sequence on the Aussie dollar is likely to be over. So we will not be maintaining our bearish bias stance for now for today. And instead, right now, we will flip back to a bullish bias stance for a potential recovery coming back into the Aussie dollar using 70.50, 70.45 as my short-term pivotal support level. Intermediate support will be at 70.65 unless we have a bullish break up above 70.95 over here. Let me put it in writing, 70.95. Then I would tighten the pivotal support to 70.65. First intermediate resistance level to watch will be at next intermediate resistance level to watch will be the minor swing high of 17th of August and 18th of August, 71.20, 71.30. Breaking above it will reaffirm this ongoing bullish impulsive upward sequence for a test at 71.47 in the first step, which is a bunch of Fibo extension cluster level, confluencing very closely at 71.47. And in graphically is also the minor congestion area of 4th of June. However, a bearish breakdown below 70.45 that would invalidate today's bullish reversal view on the Aussie dollar to see the continuation of this minor corrective pullback to revisit the next minor swing low area of 7th of August, previously at 70.22. Breaking below 70.22 will see a deeper retracement to hit the 50-day moving average, which is confluencing with this congestion area here. That's the minor swing low of 31st of July and 3rd of August at 69.90. All right, close to 69.90 level. Okay, let me put it in writing. 0.7022. And 0.6990. All right. Okay, so flipping to a bullish bias stance using 70.40, 70.45 short-term pivotal support level for a potential bullish reversal play on the Aussie dollar, given that the minor corrective pullback may have already fulfilled its endpoint today. Now, next up will be the major global stock indices. All right, starting with the Hong Kong 33, that's representing the Hang Seng Index. So the Hong Kong 33 managed to stage a bounce off our intermediate support level at 25,300. So pretty much resilient as it starts to print out a series of higher low. And the hourly RSI also being held corresponding by this key ascending trend line support level as well, indicating that short-term bullish momentum still remains intact. So no change. Pivotal support will be at 25,077, which is this medium-term ascending trend line drawn from the low of 26th of June. So first resistance level to watch will be the 200-day moving average at 25,680. Breaking above it may see a retest at this minor range top that previously was that is still in place since 31st of July at 26,065. And also this 200-day moving average also confluence with this medium-term descending trend line that still prevent the bulls from breaking out since from the high of 29 of January 2026 high. That means if we start to see a breakout above 25,685, that could reinforce another round of bullish impulsive up move sequence, given that it's also breaking above this medium-term descending trend line as well from the high of 29 of January 2026 high. So that's close to about what a level that has not been taken out since the start of this year. However, if price action starts to U-turn towards the downside, breaking below 25,077, this recovery view on the Hong Kong 33 will be invalidated and see a further corrective decline sequence unfolding to revisit the 50-day moving average that is confluencing with the next intermediate support area at 24,800 and then 24,600. Right, next up will be the Japan 225. So Japan 225 float down as expected now at the 20-day moving average over here, which is right exactly at this medium-term ascending channel support level from the low of 29 of July. All right, over here. So with that, we will now have a pivotal support level to watch for today: 65,240, 64,895. Upside trigger level will be at 64,400, 66,000. The upside trigger level, pardon me, will be at 66,400, 66,710. Breaking above it, you will see a retest on the 50 broken down 50-day moving average at 67,540 for today. All right, so potentially there could be a minor bullish reversal taking shape in the intraday session today, given that we start to see a bullish hammer candlestick at the 8 a.m. hour mark Singapore time, followed by a bullish inverted hammer candlestick at the 9 a.m. hourly mark as well. And we start to see the candlestick body getting smaller as we are speaking right now in the last 2 hours at 11:23 a.m. Singapore time, indicating the lack of indicating that downside momentum has started to dissipated after close to this 6% plus of corrective decline since last Friday high. So let me share you guys. So last Friday intraday high all the way down to today Asia session row, 6.17%. So this 6.17% corrective decline may have ended. And what's interesting over here is that this corrective pullback also stopped exactly at a key Fibo retracement level, taking into the low of 29 of July all the way up to last Friday intraday high. That is the 50% Fibo retracement level as well. So hence, bullish buyers for today: 65,240, 64,895. Short-term pivotal support level, which is right exactly at the slightly below the 20-day moving average. For the Japan 225, that's represented in K225. Upside trigger level 66,400, 66,710 for this potential minor bullish reversal to seek out a retest in first step at the broken down 50-day moving average. Now turns into a pullback resistance at 67,540. Breaking below 64,895 will invalidate this minor bullish reversal scenario to see the sell-off plunging further to revisit 64,130, which is also very close to this dotted green turquoise green line here, which is the former medium-term descending channel, we call it resistance, drawn from the current all-time high of 22nd of June, now turns into a pullback support level at around 64,130. Right. Now let's have an update the US Wall Street 30. So the US Wall Street 30 yesterday, we do have a bearish bias for this corrective decline to continue, but we mentioned that this corrective decline may come close to a support level where we may want to flip the bias back towards the bulls again. So indeed, it hit this former intermediate support level of 53,415, 53,230, 213 over here, which is the former all-time high area previously printed on the 7th of July. And what's interesting over here is that the hourly RSI has also started to trace off a bullish divergence, all right, yesterday. So indicating the slowdown in downside momentum. So with that, we will use slightly the lower boundary of this ongoing bearish flag formation over here. So let me change this. So this would not be a pivotal pivotal resistance anymore, given that this corrective pullback is almost fulfilling its a goal already. So with that, we will now flip to a bullish bias on the US Wall Street 30, represent Dow Jones Industrial Average, using 52,960 as my short-term pivotal support level, which is also slightly below the 220-day moving average. And we do the Fibonacci retracement of that prior bullish impulsive upmove sequence before this minor bullish flag take shape from the low of 30th of July all the way up to the current all-time high 5th of August. That also constitute between the 50% and the 61.8% Fibonacci retracement ratio. So 52,960 short-term pivotal support flip to a bullish bias for a minor bullish reversal. First resistance level to watch will be the upper boundary of this minor bearish flag configuration at 53,700 level. Take it as an upside trigger level. Breaking above 53,700 level will induce the start of a new bullish impulsive upmove sequence, which also indicate the bullish breakout of this minor bearish flag configuration to seek a next resistance level in the short term at 53,965, 53,965 in the first step. However, if price action tumbled way below 52,960, then this minor corrective pullback will extend further towards the downside to revisit 52,600, which is confluencing with the rising 50-day moving average. So that's for the Dow Jones Industrial Average, which is the US Wall Street 30. Next up will be the SPX. So the SPX also did that pullback as expected, now coming close to the support level 76.64, and slightly below it will be the former all-time high, which is also confluence with at 76.25, that is confluencing with the rising 20-day moving average. So given that this minor corrective pullback is almost fulfilling its goal, no point maintaining a bearish bias for today in terms of risk reward perspective. So instead, I will now flip to a bullish bias stance for a potential minor bullish reversal that may be in store coming into play for the SPX 500 today. So using 76.25 level, and also we also start to see a bullish divergence that has started to shape up on the hourly RSI, indicating the downside momentum has started to ease. So 76.25 short-term pivotal support level flip to a bullish bias stance for a minor bullish reversal signal to take shape. Upside trigger level 77.30, breaking above 77.30 will seek out a retest in first step at 77.75, 78.12, which is the current all-time swing high area of last Friday and this Monday. All right. However, a bearish breakdown below 76.25 will invalidate the minor bullish reversal scenario to see the extension of this minor corrective pullback to expose the next intermediate support level that is confluencing with the rising 50-day moving average at 75.38 next. Right. So that's for the SPX. Next up will be the Nasdaq 100. So the Nasdaq 100 also pushed down as expected, hit our 50-day moving average at 29,493, which is our support level. And if you do that Fibonacci retracement of this prior bullish impulsive upmove sequence from the low of 30th of July all the way up to the high of this Monday, current price action already hit the 23.6% Fibonacci retracement, and the 38.2% Fibonacci retracement is right exactly at the 20-day moving average, and also this former minor swing high of 22nd of July got retested on 6th of August before shaping that prior rebound before this corrective pullback take shape. So hence, given that the hourly RSI also has started to shape a bullish divergence and price action is resting as a key inflection level very closely, so potentially this minor corrective pullback on the Nasdaq 100 may also have ended its goal and we will now flip to a bullish buyer stance for a potential minor bullish reversal coming into play using 29,204, 29,205, pardon me, 29,040 as my short-term pivotal support zone. Upside trigger level 29,725, 29,920. Breaking above it, we'll see a retest of this Monday minor swing high area at 30,250, 30,380, which is the minor swing high of 1st of July. However, a bearish breakdown below 25,205, 25,040, which is the 20-day moving average, that will invalidate today's minor bullish reversal view to see the extension of this minor corrective decline to plunge all the way down to the 50% Fibo retracement that is confluencing at 28,628, which is the former minor swing high of 27th of July and 31st of July, and as well as this pullback support of this former descending trendline resistance drawn from the high of 23rd of June. All right, so that's a wrap. So potentially we may now start to see a minor bullish reversal in the first step for those global, we call it benchmark stock indices that I highlighted earlier. Next up will be the update on the precious metal, which is gold XAU/USD. So I mentioned gold yesterday, we do have a bearish bias for this kind of range bound configuration to take shape. So this range bound configuration has now fulfilled its destiny as well in terms of the pullback. And right now it's actually bouncing off from the minor range configuration support at 43.20 again. So no change right now, so no change in terms of view. It continues to actually trap within this sideways range for now. So potentially may now float back to the top of the range again. So for today, we will flip back to a bullish buyer stance within this range configuration, given that it's now coming, it's already hit this range support level, and the RSI already just exited from an oversold level, and this oversold level is the most oversold comparatively to more than 23rd of July over here. So indicating that yesterday's downside momentum may have dissipated significantly as well. So 43.20 short-term pivotal support level for a pushback up towards the range resistance at 44.34. Only breaking above 44.34 will constitute as a bullish breakout in the first step to test the key 200-day moving average at 45.04. However, if price action tumbled below 43.20, then we will see the transformation of a minor corrective pullback sequence coming back into the picture for gold XAU/USD to revisit 42.30, maximum 41.80, which is my medium-term pivotal support level, which is also very close to the 50-day moving average. All right, so that's for gold XAU/USD. Lastly will be the West Texas crude oil over here. Okay, so for the West Texas crude oil, it continues to trade within this minor ascending channel after breaking back above the 20-day moving average drawn from the low of 6th of August. So RSI continues to be held by this parallel ascending trendline support level, as you could see over here. So given that it hasn't broken above 86.58, which is my first resistance level that we highlighted yesterday, which is the minor swing high of 30th of June and this prior gap down of 3rd of August, where previously there's this optimism of this second interim peace deal that may take shape due to the mediation done by Oakman, but however, that has really been broken down. So unless price action is able to break above 86.58, then I will tighten the pivotal support from 82.96 to 84.62. So for now, still maintain a mild bullish buyer stance on West Texas oil using 82.96 as my short-term pivotal support level, which is right exactly at the 20-day moving average above 86.58. Then I will tighten it to 84.62 with the next resistance coming in at 89.27 in the first step. However, a price action bearish reversal and a breakdown below the 20-day moving average will indicate another round of choppy downward drift for West Texas oil to revisit 80.84, followed by 79.25, which is right exactly at the 50-day moving average, confluencing with it as well. Right, so that's a wrap for this selected intraday technical outlook on the selected broad-based cross asset classes, pardon me. So before we go, let's have a quick look at the economic calendar. What are the key events / data to look out for today? So as we head into the opening of the London session at 2 p.m. Singapore time, very important key UK data that could influence the sterling pound or the sterling dollar, which we have a bullish buyer setup for today, which I highlighted in my selected FX major pair to look out for. So core inflation rate will be market expecting a slight dip to 2.5% year-on-year from the previous print of 2.6% year-on-year over here. So if it starts to surprise on the upside at 2.6% or was still even at 2.7%, that could further reinforce our bullish buyers view on the sterling dollar for today. So that's at 2 p.m. Singapore time. Then thereafter, we have some speeches from key European ECB bank official, the ECB president, the boss herself, ECB President Lagarde speech. She was speaking at 3:10 p.m. Singapore time. So that could potentially influence the euro dollar and the euro crosses. That as we head into the US session, for those having a short-term interest in West Texas oil, the weekly EIA crude oil stockpile change could influence the intraday movement of West Texas oil. That will be at 10:30 p.m. Singapore time. And thereafter at 2 a.m. Singapore time, which is the 20th of August, 2 a.m. Singapore time, we have the FOMC minutes. So this FOMC minutes shouldn't be a big surprise given that the last few public speeches by US Federal Reserve officials is rather mixed, because some of them are advocating for a start of an interest rate hike cycle. But however, some of the Federal Reserve officials are pretty much concerned about demand weakness, especially a slowdown in US labor market hiring and lackluster retail sales. And that could actually advocate for we call it a pushback of interest rate hikes further down the calendar. So it's more like I believe that the debate will center more of a balancing act instead. So it shouldn't be a big surprise. And that could be a non-event as well. So that will be at 2 a.m. Singapore time. All right. Then start of Asia session tomorrow at very early at 7:50 a.m. Singapore time. We have Japanese balance of trade data. So that could potentially influence the dollar yen, the yen crosses, and as well as the Nikkei 225. And before we kickstart our daily dose at 9:15 a.m. Singapore time, China loan prime rate 1 year and 5 year. This has been unchanged for the last 1 year or so. So that shouldn't be a market mover, but market mover will come in at the Australia employment change data and employment rate. So that will be at 9:30 a.m. Singapore time. So for employment change for the month of July, market is expecting a huge dip to 50K from previous 76.3K jobs added. Unemployment rate expected to be hold steady at 4.4%. So that could influence the Aussie dollar and the Aussie crosses. So that's a wrap for today's daily dose of market insight. So before we go, there's one more thing I want to share with you guys. I forgot, it's about the earnings calendar for today. So today's earnings calendar, today will be Wednesday, the 19th of August. So 19th of August, before the start of the US session, we have Target, which is a major retailer, right? So Target will report its earnings around between 6 p.m. to 8 p.m. Singapore time. It's because it reports before the start of the US session, which will take hold at 9:30 p.m. Singapore time. So Target before US open is usually between 6 p.m. to 8 p.m. So why Target is important? Because Target is a major US retail stock. And this Target, given as a major retailing stock, its price movement will have a direct influence on Walmart itself. So given that Walmart is a major component stock of the Dow Jones Industrial Average, so hence a Target price movement may indirectly cause a significant impact on the Dow Jones Industrial Average, which is our US Wall Street CFD. So that will be something to take note of at between 6 p.m. and 8 p.m. Singapore time today. And yes, that's a wrap. So with that, do practice proper risk management, given that what we are seeing right now constitute as a highly volatile environment again. And with that, have a great day ahead, and we shall speak again tomorrow. Thank you.